Welcome back to Investing Talk Podcast. Today, we're zeroing in on an upcoming earnings report that's definitely got many investors' attention, Palo Alto Networks, specifically their fiscal Q4 2025 results. We've sifted through, all the pre-earnings analysis and chatter out there to give you the most important nuggets. We want to help you understand exactly what to watch for when they report. Think of it as your express lane, your shortcut to being truly well-informed about this key event. Before we jump into the numbers, though, just a quick ask from us. If you find value in these insights, please consider subscribing, liking, and leaving a comment. It really does help us bring more of these analyses to you. You can also consider buying us a coffee to support the show. That link's usually below. And hey, if there's a specific company you'd like us to look into for a future session, please leave a comment below. We do read those. Okay, let's unpack this. Palo Alto Networks, cybersecurity titan, Q4 2025 earnings coming up. First things first, mark your calendars. They're set to report after market close on Monday, August 18th, 2025. The conference call, that's where we get all the juicy details, and the Q&A, it's typically around 4:30 p.m. Eastern Time based on past patterns. Now, for the numbers everyone's watching, what are analysts expecting? Well, they're mostly in lockstep here. The consensus revenue for the quarter is right around $2.5 billion.
Yeah, the figure seems pretty solid across the board.
And it's not, a wild guess. It perfectly aligns with what the company itself has guided towards. Same story, pretty much. For earnings per share, the EPS consensus is hovering around $0.88 for the quarter.
88 cents, right.
Now, you might be wondering about a whisper number, that unofficial, sometimes higher expectation that floats around.
Always interesting to see if there's one of those.
Right. But interestingly, there's no distinct whisper number making waves on the major tracking sites this time. Most are just echoing that $0.88 EPS consensus.
So no real unofficial buzz pushing it higher then?
Doesn't seem like it. And just to give you the full picture, the company's own Q4 guidance for fiscal 25, it was a tight range. $0.87 to $0.89 for EPS.
Very narrow range.
Yeah, and revenue guidance also squarely at that $2.5 billion mark we mentioned.
What's truly fascinating here, if we just zoom out a bit, is just how tightly aligned everything is. You've got the company's guidance, the analyst consensus for both revenue and EPS. It's all pointing to roughly the same spot.
It's almost too aligned,
Well, it's not common, that's for sure. It really signals a company that feels it has a very clear line of sight into its business, at least for the quarter that just closed. For you, the listener, I think it means two things. One, probably don't expect a massive beat or miss just based on these Q4 headline numbers. The market seems to have largely priced in this predictability.
Okay, so less chance of a big surprise on the actual Q4 results themselves.
I think so. And two, because of that, it shifts the entire focus onto the future commentary, what they say about next quarter, next year. That becomes paramount.
That's a great point. It's like everyone's on the same page for the present, so the script for the future becomes the real story, the real show. And speaking of the past, let's look in the rearview mirror for a moment. What does Palo Alto Networks' historical performance tell us? Does it give us any clues? Here's where it gets really interesting. They've actually been remarkably consistent.
That's their reputation, isn't it? Strong execution.
Exactly. Last quarter, for instance, they beat consensus EPS. They came in at $0.80 versus the $0.77 expected. That's a solid, 3.9% surprise.
Decent beat.
But what's maybe even more impressive is their track record over time. They've surpassed or matched Wall Street's bottom line estimates in each of the past 4 quarters.
4 for 4. That's consistency.
It really is. That's not just hitting the number occasionally. That's building a clear pattern of reliable execution. And for those of you who track the immediate stock reaction after earnings...
Yeah, the post-earnings drift or pop.
Right. History offers some clues there, too. Analysts often compare the implied straddle, which is basically the options market's bet on how much the stock might move up or down against the actual price effect.
Gives you a sense of expected versus actual volatility.
Precisely. It gives you a sense of what kind of fireworks the market is bracing for. And looking at the broader trends in their results, we've seen consistent year-over-year EPS growth expectations, and those extend out into fiscal 25 and even fiscal 26 forecasts.
So the growth story is still expected to continue.
Yes, and this consistent operational progress seems baked into their guided EPS range already. It suggests a pretty stable growth narrative is the baseline assumption.
When we connect these dots, this consistent history of execution, it really underscores management's ability to deliver. And in the world of high-growth tech stocks, that consistency is just golden for investor confidence.
Yeah, predictability is valuable.
Immensely. It's not just about one big quarter. It's about repeatedly meeting or, slightly exceeding expectations. That builds trust, which is a really valuable asset, especially in volatile markets.
True.
So while this current quarter's numbers might seem predictable because of the tight guidance, that consistent track record gives them a really solid foundation to build on. It lends credibility to what they say next.
Absolutely. That consistency buys you a lot of goodwill with investors. So knowing that, let's zoom in on the past quarter itself, Q4. What were the specific drivers for Palo Alto Networks during this period? Was there any blockbuster news or event that would make this Q4 stand out?
That's a good question. What was going on?
Well, the broad commentary suggests that, honestly, the focus right now is almost entirely on this fiscal Q4 report itself and then the trajectory into fiscal year 2025. There hasn't really been a single transformative announcement flagged, nothing that fundamentally changes the story beyond the usual expectation setting for this August call.
So no major acquisitions, no big product shifts hitting right in Q4.
Not that the pre-earnings analysis is highlighting as a major needle mover for this specific quarter's results. Of course, as a major player, bellwether, some call it, in the cybersecurity sector.
Right. They're a good pulse check for the industry.
Exactly. Their quarter is heavily influenced by the general health of enterprise security spending. And the good news there, I suppose, is that most previews position expectations within a pretty stable demand backdrop.
So companies are still spending on security.
Seems like it. Enterprises are still investing, maybe even more so with, the constantly evolving threat landscape. It remains a priority. And recent analyst commentary, it just keeps reinforcing that tight alignment with management's guidance ranges we talked about. Estimates are still clustering right around $2.5 billion revenue and 0.88 EPS.
It's almost repetitive how aligned it is.
It really is.
This raises a really interesting point for you to consider, though. If there's no major internal news shaking things up and no big external surprises impacting demand, then the true focus really shifts back to those underlying demand trends in the cybersecurity sector itself. How is that overall market strength, or maybe weakness, translating into Palo Alto's numbers?
Good point. Are they gaining share, losing share, or just riding the waves?
Exactly. And maybe more importantly, what will management say about the broader market and their sales pipeline during the conference call? That commentary on the sector's health, that could almost be the unsung hero or villain of this earnings report.
That's a great insight. It's not just the numbers they report, but the narrative they build around them, especially about the market environment. Okay, let's switch gears a bit and talk about the market's reaction, the stock itself. What does the technical setup look like for Palo Alto Networks heading into earnings? And what's the options market implying about potential price moves?
Right, the chart and the options tea leaves.
Yeah. First off, the stock's performance leading up to this hasn't been bad at all. Over the last 12 months, Palo Alto Networks stock is actually up about 18.7%.
Pretty decent return.
Yeah, and it's modestly outperformed both the broader tech sector, like if you look at the XLK ETF, and the S&P 500. So it comes into this report with some positive momentum behind it.
There's a reasonably positive stage then.
It does. Now, for those of you who follow charts closely, identifying key price levels is always essential around earnings. You'll want to watch for support. Think of that as the price floor where buyers tend to step in. Look for that around recent swing lows, maybe key moving averages.
Places where it's bounced before.
Exactly. On the flip side, resistance is the ceiling, where sellers might push back. You find that often at recent swing highs, or maybe even gaps in the chart left over from prior earnings reactions.
Got it. Support and resistance zones.
And then there's the options market. Platforms track something called the implied straddle going into earnings. This basically gives you a statistical expectation derived from options prices of how much the stock could move up or down in percentage terms right after the report hits.
It's a market pricing in the uncertainty.
Precisely. It's not a prediction of direction, but it's the market literally putting a number on the potential size of the move, the expected volatility.
Exactly. And understanding those technical levels, the support and resistance, along with that implied volatility from the options market, gives you a really valuable perspective.
How so?
Well, it's not about predicting which way it'll go, but it helps you gauge the market's collective expectation for the amount of price fluctuation around the report. So, for example, if the implied straddle suggests, say, an 8% move is expected, it tells you the options market is anticipating a fairly significant reaction, even if the consensus numbers look pretty locked in. It helps you quantify the potential risk or opportunity around the event itself.
Right. It frames the potential magnitude of the reaction. Okay, so Armed with all this context, the tight guidance, the history, the market setup, let's explore the potential scenarios. What could actually unfold after the report? What's the dream scenario for investors?
The bullish case.
Yeah, the home run scenario.
That would be the classic beat and raise.
Yeah.
So revenue coming in clearly above that $2.5 billion consensus.
Mm-hmm.
EPS may be surprising to the upside, getting above the high end of their guidance, so north of 89 cents.
And the raise part.
Crucially, yes. That would also involve a fiscal year 26 outlook that implies sustained double-digit growth.
Yeah.
Management sounding really confident about demand.
Right.
Historically, that kind of performance, especially when paired with confident commentary, tends to spark very positive stock reaction.
The market loves a good beat and raise.
Always. Now, what about the less rosy picture, the bearish case? What could go wrong?
Well, the opposite, obviously. A miss on revenue compared to the $2.5 billion mark, or EPS coming in below the low end of guidance, under $1.87. But maybe more likely, given the tight Q4 guidance, would be a cautious tone for management. Perhaps on billings, that's a key forward-looking metric, or just generally weak forward guidance for FY26.
So even if Q4 is okay, a weak outlook could hurt.
Definitely. Any hint of decelerating growth or maybe commentary about fewer net new large deals being signed, that could put significant pressure on high valuation cybersecurity stocks like Palo Alto after the print. They trade on growth expectations.
Makes sense.
And really, for this specific quarter, given how well-signaled Q4 seems to be, the single most important swing factor is probably that forward guidance, both revenue and EPS outlook for the next fiscal year.
Yeah, I agree.
Management already sort of bracketed Q4 pretty tightly, so investors are going to be laser-focused on how that FY26 cadence, the rhythm of growth they project, aligns with what the street is already expecting.
What's absolutely crucial here, I think, is reinforcing that point. While the Q4 numbers themselves are important, of course they are, the future outlook, the guidance, will almost certainly be the primary determinant of the stock's reaction this time around. It's all about that forward trajectory and the company's confidence, or lack thereof, in that path.
It's always about what's next in this market.
Especially for growth stocks like Palo Alto Networks. Think about it. If the Q4 numbers are perfectly fine, just in line, but the outlook is even slightly disappointing, the market could react negatively. Why? Because that future growth premium built into the stock price isn't being fully justified anymore.
Right.
Conversely, even a modest Q4 beat, if paired with really strong forward guidance, could ignite enthusiasm and push the stock higher. It's all about managing those future expectations.
That makes perfect sense. The market is relentlessly forward-looking. So with all this in mind, let's try and synthesize. What's the overall leaning here, and what might this mean for your strategy as an investor considering this event? Based on all the analysis, our overall leaning for Palo Alto Networks' upcoming report is neutral.
Neutral, okay.
Yeah, and our confidence score for an inline print, meaning results pretty close to expectations, is maybe a 5 out of 10.
So middling confidence.
Yeah.
50-50 on whether it's just in line.
Sort of. The reason for this, moderate confidence or neutral stance is precisely what we've been discussing. The company guidance and the analyst consensus are just so tightly aligned.
$1.87 to $1.89 EPS, around $2.5 billion revenue.
Exactly. It strongly suggests an inline report is quite likely for Q4 itself, which in turn means the actual Q4 numbers might not be the big catalyst for a stock move.
Right. The surprise potential seems lower for the quarter itself.
So therefore, any sizable movement in the stock is much more likely to hinge on that forward commentary, the guidance, rather than the backward-looking Q4 results. Now, thinking about strategy implications, what does this mean for you? Well, if you're a more risk-averse investor, perhaps the most prudent approach is to simply wait. Wait for the actual print, wait for the official guidance to be released before initiating any new positions.
Let the dust settle first.
Let the dust settle. Now, for those of you who are maybe more risk-tolerant or looking to trade the event itself, an options approach, perhaps calibrated to that implied straddle we talked about, could be considered.
Playing the volatility.
Potentially. This might involve targeting volatility capture, maybe using a long straddle or a strangle strategy if you have a strong conviction that there will be significant guidance shifts that surprise the market, causing a bigger move than expected.
Betting on a bigger move than the options market predicts.
Right. Alternatively, if you actually anticipate an inline outcome and you expect that implied volatility to sort of collapse after the earnings release, which often happens once the uncertainty is gone,
So on premium.
you could consider strategies like credit spreads, maybe positioned around those key support or resistance levels we identified earlier. That would profit if the stock stays within a range and volatility drops.
Different ways to approach it depending on your view and risk tolerance.
Exactly.
This neutral leaning really just underscores the current balance of expectations. It
Yeah.
feels like the market has largely digested and priced in the Q4 numbers already. So as we've said, any significant movement, up or down, is likely going to be a reaction to the path forward the company lays out, not just a reflection of what they achieved in the past 3 months.
Mm-hmm.
It makes that conference call and management's tone, their projections, absolutely vital for investors to listen to and dissect very carefully.
Absolutely. So, as you consider Palo Alto Network's upcoming report, here's maybe a final thought to chew on. For growth stocks, especially in these really dynamic and, frankly, essential sectors like cybersecurity, how critical is that forward guidance compared to just hitting the current numbers? Are investors looking for steady execution, or are they always implicitly demanding that next big growth catalyst, even if it hasn't been announced yet? The present numbers, sometimes they tell less of the story than the promise or lack thereof of the future. Okay, that's our look ahead at Palo Alto Networks. Don't forget to subscribe, leave us a like, and please do comment below with any companies you'd like us to look into next time. We appreciate the suggestions. And if you found this valuable, considering buying us a coffee really helps us keep bringing you these insights. Thanks for joining us on Investing Talk Podcast. We'll be back soon with more.